One man bought more Bitcoin than any company on Earth, 847,000 coins. He swore he would never sell. Last month, he sold. This is the story of the biggest Bitcoin bet in history, and what happens when the market tests a promise. Level 1. The Vow. Meet the Believer, modeled on Michael Saylor, the software CEO who turned his company, Strategy, into the world's largest corporate Bitcoin vault. It started in 2020. Cash was melting, rates were zero, and Saylor made the call: swap the corporate treasury for Bitcoin. The machine worked like this: sell new shares, buy Bitcoin. Bitcoin rises, the stock rises faster. Sell more shares, buy more Bitcoin. A flywheel, as long as the line goes up. By 2026, Strategy held 847,363 Bitcoin. Reported average cost around $75,600. Total bet, roughly $64 billion. And the vow that built a following: never sell your Bitcoin. Not in a crash, not ever. Level 2. The Storm. June 2026. Bitcoin dropped over 20% in a single month, touching 58,000, a 21-month low. That put the whole stack about $13 billion underwater. Every coin bought above 75,000, losing money on paper. Then a scarier number. In late June, the company's market value fell below the value of its own Bitcoin. When that ratio drops under 1, issuing shares to buy coins stops making sense. The flywheel chokes. And the machine had bills. Strategy funds itself partly with preferred shares that pay fat dividends. Obligations analysts estimate at over $1 billion a year, quadruple what they were. June 1st. For the first time since 2022, Strategy sold Bitcoin. 32 coins. $2.5 million. Pocket change for them, but the vow was broken. Analysts called the sale immaterial. The internet called it something else. Level 3. The Pivot. June 29th. Strategy filed a new playbook, the Digital Credit Capital Framework. Translation: the rules of the game just changed. The board authorized selling up to $1.25 billion of Bitcoin, about 20,800 coins, 2.5% of the stack. Authorized, not executed. That distinction matters. Alongside it, a $2.55 billion cash reserve, $1 billion in stock buybacks, another $1 billion for its preferred shares, and the STRC dividend raised to 12%. The market's verdict? The stock bottomed at $82 on June 26th and closed near $100 on July 2nd. Citi kept a buy rating with a 260 target, and days after defending the plan, Strategy bought $43 million more Bitcoin. Zoom out, and the whole market was bleeding. U.S. spot Bitcoin ETFs saw roughly $4 billion leave in June, their worst month ever. This wasn't just a Strategy problem. Final level. Every game like this has two endings. Ending A. Bitcoin holds 58,000 and recovers. The reserve buys years of time, the dividends get paid, the buybacks close the gap, and the flywheel spins again. In this ending, the pivot looks like discipline. Ending B. Bitcoin keeps falling. Reserves drain, more coins get sold to pay dividends, each sale spooks the market, and the discount deepens. Not a margin call to zero, most of the debt can't force a fire sale, but a slow, reflexive grind. Which ending plays out? Nobody knows. Anyone who says otherwise is selling something. What we know is the era of never sell is over, and the machine now officially has a sell button. If you want to follow along, watch the 58,000 support level, the mNAV ratio, monthly sale disclosures, and whether that 12% dividend keeps getting covered. One last thought. A single company holds roughly 4% of all Bitcoin that will ever exist. Concentration built this story on the way up. It cuts just as deep on the way down. And remember, coins in your own wallet answer to no one's dividend schedule. This has been the Meme Economy. Everything here is education, not financial advice. Numbers are reported estimates, and they move daily. Subscribe. Player 2 is already waiting.